Yep, you guessed it. It's time for the top 10 retail stocks that you guys, me and you, the little guys, are buying right now today. These are the 10 most popular stocks. And guys, I got to be honest, once again, this list always shocks me as to what everybody's out there buying. So let's go over each stock individually here. We'll kind of go through the goods and the bads with each stock. And of course, I'll tell you whether or not you should pump it or dump it essentially. So that way you can have my take, my opinion on these stocks. So if you like this style video, make sure you like the video so that way I know you guys like it, so that way I can make more content like this if you guys enjoy it. All right, now before I get to the list here, just keep in mind, I'm viewing this from a long-term buy and hold investor's perspective. I have no idea if there's a trade there or not. I'm not a day trader. I'm not a swing trader. I'm not an options player. I'm not any of those sorts of things. So I'm not talking about that. I'm strictly looking at this from a long-term buy and hold investor's perspective. That's the way I'm looking at it, just so that way you guys kind of know. So, hey, maybe a trade there. I have no idea. But, if you blast me down in the comments saying, hey, look, there's a great setup here. The, 20-day moving average says this, or the, Fabro, Nietzsche, Gucci, whatever line says that. Okay, cool. That's not how I'm viewing it. I'm viewing it from a long-term buy and hold investor's perspective. All right, so number 10 is APE, and you guys have heard my opinion on this before. It's a complete dump it for me. I don't understand what folks are doing there. I guess there's a trade there, I guess. I have no idea. But for me, absolutely a dump it. I want nothing to do with anything in regards to that, which of course then basically knocks number 9 off as well. And that stock would be AMC. I know, I guess there's still some folks out there that are holding on to the $100,000 per share price that supposedly still gets floated, I'm sure, at times. I have no idea. I don't go. Thankfully, those videos aren't showing up in my feed anymore on YouTube. But nonetheless, I don't know what the play is there. And at least from a long-term buy and hold investor's perspective, the stock is just not a great stock. And again, that management team's crazy. I don't know. You guys own gold mines. You own a bunch of other stuff like that. Who knows what they're going to do next? It's kind of random. It's kind of hodgepodge. Now, of course, you guys know I like to go to the movies, although I hardly ever go, but I still love the movies. So obviously, I hope AMC succeeds as a business long term. But in regards to the stock, I want nothing to do with the stock. All right, so number 8 is NEO. And you guys know, I'm going to call it a pump it, but it's a pump it with caution here because they are struggling. They're just not executing on a high level right now. We got better earnings than we thought last time around. We'll see what happens on earnings this time around. But the last earnings were better than I thought, better than what we had gotten previously. But they were still kind of so-so. And you're kind of seeing that with delivery numbers and stuff like that. They're just kind of at that in-between stage. I still think they are just burning way too much cash. They're spending a lot of money on building out brand versus actually getting more efficient, just getting better as a business. Now, I understand they're doing a lot of vertical integration right now. That's great for the company, but that's going to be expensive. And they probably should have spent that money there instead of spending it on branding over the past year or so. They'd be in a much better spot right now versus just now starting that idea and basically starting that transition now. So for me, they're trying to get there. They're just not quite there yet. So you got to proceed with caution with this one. Also understand it's a Chinese stock. So, you can't go out there. I would never put as much money into NEO as I would Tesla, for example, regardless of where performance was, just simply because NEO is a Chinese stock and you have to give that. And investors, more importantly, large investors, give a significant discount to Chinese stocks. So you have to understand that there. So for me, I want exposure to the Chinese car market. I absolutely, especially if they're pushing that, 2030 timeline, 2035, whatever it was, for all Chinese vehicles in order to be EVs. Obviously, you want to be a part of that, but you have to understand the risk also involved in investing in Chinese companies. So make sure you're accounting for that before you even look at starting a position in NEO. So number 7 is Disney. And this one right here, guys, I have it in between, squarely in between. If you're looking at it and you're wanting to take a risk reward position in Disney, it's at a great price right now if you think Bob Iger can turn it around and get things moving in the right direction. But they have significant business problems. I don't care about all the political BS, could care less about politics, period. But in regards to business problems, they have a lot of business units that are significantly underperforming. They have some that are also performing wonderfully on the other end of the spectrum. And it's just trying to get it all together and trying to figure out, hey, how do you get rid of the losers and still be able to generate enough revenue with the winners in order to continue to move this stock forward so that way they can restart the dividend, so that way they can do a lot of the things that Disney stock was able to do in the past. So for me, if you fall on the pump it side, I get it. There could be opportunity there if they're able to execute. If you fall on the dump it side, I completely get it because they are having actual business problems. This isn't just the stock fell out of favor with Wall Street, the stock's cyclical. This isn't any of those things. They have business problems, so you have to account for that. So stock number 6 is NVIDIA, and you guys know this is a pump it all the way around. I don't personally own it. I don't understand chip makers at all. I don't understand the business model. I don't understand a lot of things in regards to the actual manufacturing, what the actual risks are with a stock like that and such. but man, they have just been performing on a high level, blowing out earnings, and then adjusting guidance up. What, two, three earnings calls now in a row. So right now it's just a freight train rolling. I don't see, at least in the next year or so, anybody taking over in regards to being able to provide the chips that they're able to provide for AI that everybody seems to be pouring money into right now. So it's probably going to be a moneymaker for the foreseeable future. And more importantly, I think it's a great long-term stock regardless. So definitely one that I would say pump it. So at number 5 on the list, which kind of surprised me, and that would be Ford. I know the auto workers just struck a deal and it wasn't nearly as good as I think they were asking for to begin with, or we thought that they were going to get to begin with. But man, I don't know. Take a look at their balance sheet, take a look at their financials, and it's not good. It's not good at all. I don't care what the valuation is at this stage. I don't personally want to own legacy auto at all. Now, that doesn't mean that I think legacy auto is going to go away and it's only going to be Teslas on the road or any of that other stuff like that. I don't believe that at all either. I believe legacy auto will survive. But just simply because a company is surviving, limping along, it turns into a zombie company. The point being, they can essentially, issue bonds, take on debt. They can do a lot of things to keep themselves running for decades into the future here. But that doesn't mean that I want to own the stock while they're out there busy doing that. So I don't think Ford's going away anytime soon. But in regards to owning the stock, this is absolutely a dump it for me. I want nothing to do with anything legacy auto. So stock number 4 is Apple. And guys, you guys know this is my favorite stock in the stock market. I have to say it's a pump it. But I got to give a little bit of caution here. It is running rich. They clearly, I don't know how they managed to blow out earnings quarter after quarter after quarter after quarter, long after everybody else slowed down last year. Apple didn't slow down, and it looks like they're finally hitting their slowdown this year. So, in regards to Apple, you've got to understand where they're at. And this happens. Businesses kind of plateau for a little bit until they kind of hit their next stride, their next bump up in regards to revenue growth, EPS, and all those sorts of things like that. So for Apple, I see no reason to sell my position. I see no reason why I wouldn't add more if I was looking to build out a position or anything like that. But you got to understand where they're at in that cycle. And it looks like they're finally hitting the slowdown period in regards to the stock. They're just a year or two later than everybody else on the stock market was. So for me, it's a pump it, but you gotta be cautious with this stock and understand where you're at in the cycle. So stock number 3 is Tesla. And you guys know I'm a Tesla bull. I'm gonna say pump it. But I also know and I also believe that Tesla's going to have problems over the next few quarters. Now, long term, they're just fine. They have plenty of cash, plenty of everything in order to kind of weather the storm per se. But all the folks that thought Tesla's different than the rest of the automakers, they're not cyclical, they're not going to be affected by a downturn or anything else like that. Well, it turns out that's not actually true. Elon finally admitted it on the last earnings call. And Cybertruck is going to be a beast to do, which of course makes sense. I mean, you're trying something completely new. It's like nothing we've ever seen before. That's why I think it's awesome and cool. But it also means you're going to have some quarters where basically you're going to lose money or be close to losing money, or, just it's not going to be nearly as good as it should be because all that money is going towards Cybertruck and Cybertruck production and trying to get that down, trying to get the cost down and everything else. And it just takes time. It's hard to do. The last time Tesla had to do this, it was with the Model 3 and it almost bankrupted them. Now, I don't think we'll be anywhere close to bankruptcy. So I'm sure somebody's going to run with that narrative at some point in time. Total garbage. Completely ignore it. Don't think that at all. But it doesn't mean that we're not going to have a few quarters of not so great earnings. But you got to understand the why behind those earnings. That's why it's so important to listen to those calls, not just listen to what YouTubers say or read an article or listen to Kramer or some other, moron that goes on to CNBC and tells you, why he's doing this. And then it turns out he's got a short position in Tesla, all that other garbage like that. Get rid of all that sort of stuff. Understand what they're doing and understand where they're at. Again, it's kind of like Apple. Where are they at in the cycle right now? And they're during one of these times to where there's going to be a big boom on the back end when they get through it. But we're at the very beginning stages of trying to get through that period. So definitely a pump it for me, but you got to use caution with Tesla. So stock number 2 is Microsoft. And guys, that's clearly a pump it. They just had incredible earnings. They're showing huge growth in their cloud business. I mean, I don't know. It's another stellar stock, another stellar company that just continues to produce day in and day out. This is why they're one of the top 5 stocks in the stock market itself. So I got nothing but good things to say about Microsoft. I don't personally own it because I own so much Apple. I don't necessarily want more exposure to big tech than I already have. But there's no doubt in my mind, Microsoft is a great stock. They are crushing it right now in regards to performance and everything else around the stock. So I don't know how much more run we can get out of the stock. Obviously, it's a mega cap stock, but nonetheless, it's still a great stock. And stock number 1 is Amazon, which again, this was kind of surprising. This one right here was the number 1 stock, but they just had great earnings. There's just not enough things you can say about Amazon. They are growing in ways and taking market share. in every single line of business that they're jumping into. And so Amazon is 100% a pump it for me. I am so glad we were just loading up shares in the 80s last year, because we got a significant period of time, especially with Amazon there. It seemed like it was 3 or 4 months where it couldn't get over the 100. It went under 100, and then it just kept falling, kept falling, kept falling. And then it would run up and come back down, run up and come back down. So we got an extended time frame to add as much Amazon as you wanted last year, and they're performing this year and absolutely knocking it out of the ballpark. So again, congrats to you guys that bought. But for me, hey, you want to get any sort of weakness in Amazon, I'm going to happily add shares to Amazon. And remember, if you want to see my buys on stocks like this in real time and see my watch list complete with price targets, you want to take 5 courses for free, you want to use our stock analyzer tool for free, you want to be a part of the best 6, 7, and 8-figure Discord out there, you want to slide into my DMs, you want to jump on our Q&As, just so much coming in the future and so much in the group right now that you can take advantage of. Several hundred different videos, tutorials, lessons, just so much, guys. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see the other stocks that I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.